Hello everyone. Have you ever wondered why a stock's price seems to stop falling at a certain point or why it struggles to go past a specific level? It is just human psychology at play. These levels are called as the support and resistance. The concept of support and resistance in the share market are not just technical lines on a chart, they are a visual representation of mass market psychology. They illustrate how human emotions like fear, greed, and regret drive collective buying and selling behavior. In this video, I'll break down this psychology that create these invisible walls in the market. So let's start. Before moving on, please read the entire disclaimer carefully. So before moving into the psychology, let's first quickly understand what they actually mean. Support is a price zone where a stock's decline tends to stop and the price reverses upward. Think of support as a floor. When the price hits this floor, there is a strong collective belief that it is a good price to buy, preventing it from falling further. Take a look at this chart. The zone enclosed with the blue lines shows the support zone. So this zone is a support zone, and as you can see, this chart has taken support from this level one time, twice, thrice, four times, and five times. So this level is acting as a support for this stock. Similarly, resistance is a price zone where a stock's rally tends to halt and the price reverses downwards. Now think of resistance as a ceiling. When the price hits this ceiling, a strong group of sellers believes it is a good price to sell, stopping the price from rising further. It is shown as the area enclosed between the blue lines in this chart over here. So this is the blue line, this is the blue line. So this one. So if you see this chart, it tests this resistance level once, twice, thrice, four times, five times. So this level is serving as a resistance for this chart. So these levels, whether it's a resistance or a support, are not precise. They are often price zones where the market's collective memory and emotional biases comes into play. Okay. Now we are aware of what the support is, what the resistance is. Let's dive into the psychology behind support first. So it is when the greed and opportunity comes into play. It is the buyer's mindset which results in the creation of a support zone. So it is an important thing. It is the buyer's mindset which result in the creation of a support. There are two kinds of human emotions which plays the decisive part in the creation of support. First is I missed it emotion. A trader who saw the stock go up from this level earlier now feels they missed an opportunity. When the price returns to this level, they see it as a second chance and rush to buy it. The second emotion is I am not selling here emotion. Investors who bought at a much higher price are holding a losing position now. When the price dips at a previous low, they refuse to sell out of fear of a complete loss, which reduces selling pressure at this level. So, support levels are created by the collective memory of a good deal. People are anchored to the belief that this price point is a bargain. Now let's try to understand the psychology behind resistance. It is when the regret and relief comes into play. It is the seller's mindset which results in the creation of resistance zone. So again, it is the seller's mindset. Support was buyer's mindset. Resistance is the seller's mindset which result in the creation of resistance zone. Again, there are two kinds of human emotions which plays the decisive part in the creation of resistance level. First is I am finally even. A trader who bought the stock at a higher price and then watched it fall in a feeling immense regret when the price finally returns to their original purchase price, they feel a huge sense of relief and immediately sell to get out of the position, creating a surge of supply. Second emotion is I'll do it again. A trader who previously sold at this level and saw the price drop now remembers it as a smart move. They are inclined to sell again, believing it will lead to another profitable trade. So the resistance levels are created by the collective relief of traders who are finally able to get out of a losing position. Okay. Now there are two events in the stock market which demonstrates the human psychology beautifully. First is breakdown. A breakdown occurs when a stock price moves below a key support level. This is a bearish signal indicating that selling pressure has overwhelmed buying pressure and the price may continue to trend downward. And the second event is the breakout. A breakout occurs when a stock's price decisively moves above a significant resistance level. It is considered a bullish signal suggesting that buying pressure has overpowered selling pressure and the prices may continue to trend upward. There is a psychological shift that takes place after a breakout or a breakdown. It is so strong that it causes a role reversal and is called as the polarity principle. When a breakdown happens, all the regretful buyers who are now at a loss turns that old support into a new resistance. So this is role reversal. Support is turning into a resistance. If the price tries to rally back up to the old support, it is likely to hit a wall of sellers, that is, faces a new resistance, and the price will fall again. So the role has been reversed. The old support is now a new resistance. Similarly, when a breakout happens, all the buyers and short sellers who are now covering their positions turn the old resistance into a new support. So, again, a role reversal. Old resistance is now a new support. The price will often come back to retest this old resistance, which now acts as a support before continuing its upward trend. Okay. So let's now try to understand this psychology with the help of a case study. This is a hypothetical but a very common scenario in the stock markets. Let's consider a stock called ABC Industries. Now, ABC's stock price rallies from say 2200 to a high of 2600 before a sudden negative news event, for example, a disappointing quarterly result, causes it to fall back to 2400. Now this human psychology is can be seen in action at this point of time. Now there is a group, let's say, call them group A. They are the regretful holders. Investors who bought at or near 2600 are now at a loss. They tell themselves, if the price ever gets back to 2600, I'll sell and get my money back. So this is first psychology. For the next psychology, let's assume a group, call it a group B, and they are the profit takers. Traders who bought at a lower price, for example, 2200 rupees, see the price nearing its previous high. They think this is a good time to book my profits before it falls again. And the third psychology, let's call that group as a group C, are the short sellers. They are the aggressive traders anticipating a fall, start placing short sell orders at or near 2600, betting that the price will not break this ceiling. When the stock price again approaches 2600, the collective actions of these three groups creates a massive supply for sellers, making it difficult for the stock to move higher. This is how a resistance is formed. Okay, so this is how a resistance is formed. Now, following the resistance at 2600, the price falls all the way down to 2200, a level from which it had previously rallied. Again, the psychology of can be seen in action in the share market. Again, there are three groups of uh, investors or traders. Let's call first group as a group A. They are the cheerful sellers. Investors who sold at 2600 now see the price falling. They think, I did good by selling. If it gets to 2200 again, I'll buy it back in. Next group, let's call them group B. They are the value buyers. Long term investors and institutions who believe the company is fundamentally strong see the stock at a lower price and they think this is a great buying opportunity. The risk is low here. And finally, the third group, let's call them group C, they are the traders. Short term traders who profited from the fall now look to cover their short positions and go long as they believe the price has hit its bottom. So when the price nears 2200, the buying pressure from these groups creates a strong floor, preventing the price from falling further. This is how a support is formed. Okay, so we have seen how the support and resistance are formed, the psychology as well as the case study. So now I hope that the psychology behind support and resistance is clear to you. That is all from my side in this video. Thanks for watching it. Please like, share, comment, and subscribe. I'll be back soon with another video. Goodbye for now.